This conference will now be recorded.
Hello everyone, thanks for joining. This is the Forest 500 2018 launch webinar. We're going to go through what Forest 500 is as a project, the data that it provides, the key changes we've made for this year, and then also the findings that we've made with the analysis this. First of all, just a bit of housekeeping. Please do keep yourself muted and turn off any webcams. And we are recording the webinar and we will share it with you all afterwards. And there is time for questions at the end, so please do keep them for discussion at the end. Great. I'm going to hand over to Nikki to introduce the webinar. Are you there, Nikki?
Yes, I'm here. Many thanks. Can you hear me?
Yes.
Good. Thank you very much. Welcome to everybody. Happy International Forest Day. And let me just kick off by saying that if we can go to the next slide, Sarah, the NYDF was really the starting point for the Forest 500, the New York Declaration on Forests, which brought together a remarkable group behind 10 goals to cover all the actions that are needed to protect forests. And that was in recognition in 2014 of the critical role that forests play in protecting climate and biodiversity and, of course, people's rights on the ground. And those issues over the last 5 years have only grown more critically important. Goal 2 of the New York Declaration on Forests, out of the 10 goals, is specifically on commodity-free supply chains. And what the New York Declaration on Forests saw was a coming together of a very broad community, a really quite remarkable community of companies, governments, financial institutions, and civil society behind the goals. But goal 2 had a special status in a way on these deforestation-free supply chains because it built on a remarkable commitment, earlier commitment by the Consumer Goods Forum, a group of over 400 consumer goods companies worldwide, to achieve deforestation-free supply chains themselves, and also others such as the Banking Environment Initiative of financial institutions, and latterly the Amsterdam group of countries who signed the Amsterdam Declaration, all made commitments to deforestation-free imports, deforestation-free investments, and deforestation-free supply chains. So goal 2 of the New York Declaration brought that together and enshrined it in a document with much wider support. It was an ambitious act of leadership, and it was exactly what was needed at the time. So back in 2014, we began Forest 500 really with 3 goals. I mean, the first was to make sure that we could track the progress of those with commitments. And subsequently, there's been a broader civil society effort to comprehensively track all of the goals of the New York Declaration on Forests, the 10 goals, and we're very proud to be part of that New York Declaration assessment group with a special focus on goal 2 on commodity supply chains. But the other thing that Forest 500 set out to do was to move beyond the leaders and to move beyond those who were stepping up and declaring these ambitions, to identify the broader group who needed to come on board in order to solve the problem in order to tackle the 2/3 of deforestation related to commodity supply chains. So we took we did a selection process that arrived at 500 of the key power brokers from whom action on this problem was critical, and that included 150 financial institutions. So while we had seen leadership from the Banking Environment Initiative, there was really not much action, or we didn't really hear the voice of the broader financial community. So we also thought it was extremely important to bring those actors to the table as well. So if we could just go to the next slide, Sarah. This year is a critical year on the 2020 commitments. The UN General Assembly convening in September this year marks 5 years since the New York Declaration on forests was established. It's a moment of taking stock. That will be just 3 months before we reach 2020. Of course, some debate on whether we mean the end of 2020 or the beginning of 2020. But we're at a moment of stock taking, and the facts are that the problem continues apace, that we're not seeing these commitments translate into action on the ground. The leaders are not necessarily translating their commitments into action fast enough, but we still have over 50%, or sorry, 40% of the most exposed 500 companies and financial institutions worldwide that still don't have any kind of commitment. It's a moment when keeping ambition and momentum high is absolutely critical, and we'll be looking with great interest to see what the future of these commitments will be when September comes around. And we think the Forest 500 plays a critical role in keeping ambition and momentum high. We've made some changes this year in recognition of both the urgency, but also the fact we're coming to the end of the cycle. So Sarah will be talking about those changes to the initiative, which we hope will keep up the pressure on companies and financial institutions, not only to take action themselves with strong policies, but also to exert their influence and power down the supply chains through their portfolios to keep action and pressure on this issue. We think new time-bound commitments are critical, and at the meeting of the Banking and Environment Initiative just a few months ago, we heard from financial institutions how important it is for them, for the leaders who are taking action on this issue, how important it is for them to have time-bound commitments from the companies that they invest in and lend to as a vehicle for engagement and applying pressure. So with that, I will hand over to Sarah, and thank you all again for taking part today.
Thanks, Nikki. That's great. So as Nikki has already touched on, I'm just going to do a brief overview of what the Forest 500 project is. So there's largely two parts of the Forest 500. The first is actually identifying who makes up the 500. So we call them the power brokers because we identify the largest players in supply chains linked to deforestation. So these are the organizations who could have the greatest potential impact on reducing deforestation if they were to act on it. We look at 4 supply chains: palm oil, cattle products, so beef and leather, soy, and timber products, so wood and paper. And we use production, trade, and market data to identify the largest companies in those supply chains. So we get coverage from producers all the way up to retailers. And we choose 350 companies that are the largest players in those supply chains. Once we've selected those 350, we look at the financial data of those companies, so any shareholdings, any loans to them, any bond holdings. And using that data, we choose the 150 financial institutions, so the key banks, the key lenders, the key investors, who are giving the most finance to those companies, so we can link them directly. We repeat our selection process every 2 years to make sure that we're capturing any changes in the market. The second half of the project is the assessments. So our companies and financial institutions are assessed annually for the policies and the commitments that they've made to tackle deforestation, either in their supply chains or in their portfolios. We only assess them on publicly available information, so commitments and policies that the companies have made publicly and put up on their websites or in their company communications. So every year we do a review of all the company websites and we assess all of the commitments that they've made available. We're careful to make sure we're assessing them in their native language, and we complete the assessment for each power broker. Our methodologies look at 3 main areas of the commitments. So the first is the strength of the commitments. So do they include key requirements such as protecting high conservation value forests or protecting workers' rights in their supply chain? We look at the scope and the ambition. So do they have a deadline and when is it? Does it apply to all of their sourcing, or does it only apply to some areas or some subsidiaries? Or if we're looking at a financial institution, then does it apply to all of their financing types, or does it only apply to loans or only investments? And finally, we look at the reporting against those commitments. So are they publicly disclosing how they are doing against the commitments that they've made? We've made a few changes to the methodology this year. So we've added a few indicators to our assessment methodology. This was really to increase accountability amongst the companies that do have commitments. So we've added new indicators to try and get at whether a company is implementing the commitments that they've made, to better distinguish between a company that has just made a commitment but not thought through how they're going to achieve it, and the companies that have made strong commitments and laid out action plans for how they will implement it throughout their supply chain. We're also planning to release the full data set. So where previously we've ranked institutions with a score out of 5 and an amalgamation of all of our indicators, we're now going to release the full data against each indicator. So anyone will be able to download it and see how a company or a financial institution is doing against every indicator. So now I'm going to go through a few of our key findings from this year. Every year we see more commitments from companies. So the trend is in the right direction. But as you'll see in the animation on the screen, it's not going up fast enough. We also see a bigger gap with soy and cattle, where they are being left behind and compared to palm oil and timber products. So you can see from this trend that it is in the right direction, but thinking that 2020 is next year, there's a long way to go before all of the power brokers have a commitment for all of the commodities that they're exposed to. As an example, between 2017 and 2018 in soy, which is the yellow graph, only 3 companies added a commitment. For all of those companies to have a commitment by 2020, we'd need 83 more companies to set a commitment for soy. And then it's important to remember that this is just developing a commitment, and a commitment will actually have to be implemented throughout the supply chain to meet our global goals of eliminating deforestation by 2020. So I mentioned that we added new indicators on implementation this year. We looked at whether companies were monitoring their suppliers for compliance, what they say they would do if they found non-compliance in their supply chain, so how they would deal with that, whether they have a grievance mechanism for issues in their supply chains to be reported to them, whether they reported on any collaborative actions they were taking, in their supply chain to improve sustainability and reduce deforestation. So if they're working with other companies or NGOs in their supply chain. And then whether they report their direct suppliers or sourcing regions, so detailed concession maps or coordinates as well. Looking across all of these indicators, 3/4 of the companies with commitments scored for at least one of these indicators. So there is implementation happening, but it's likely that they're going to need to use more than one of these activities to successfully implement their commitments. There are a few interesting trends within these indicators as well. So the bottom left graph is whether they've reported on collaborative actions in their supply chains. And you can see that it's much higher for the cattle, the red bar. So this is interesting because cattle is the sector with the fewest commitments, but those that do have commitments are far more likely to be talking about collaborative actions that they're involved in. The bottom right graph is the reporting of suppliers or sourcing regions, and that is the lowest across all commodities. And interestingly, no companies in the soy supply chains report this at all. So we've seen that financial institutions consistently lag behind companies in setting policies on deforestation. This may be that they're perceived as being further removed from the impact, but it is important to remember that they are exposed to significant risks through the companies that they are investing in or lending to, and also that they have important leverage to change company practices to mitigate risks that they see to the business. So the top scoring financial institutions are here on the right, and this year none of them scored 4 out of 5 or 5 out of 5 for their deforestation policies. We added a few new indicators to the financial institution methodology this year as well to align with the company methodology. So there's one on whether they ask companies to have grievance mechanisms, another on whether they have a policy on gender equality for companies to follow, and finally whether they have one on small-scale farmers, so smallholders. And not many had scored for these new indicators across the board, as you can see. But the most stark was the small-scale farmers, where only 2 financial institutions had a policy on this, and both of them only applied it to palm oil, so they weren't looking at any other commodity. So some companies are leading the way in setting their commitments and looking at implementation already. However, no company scores perfectly, and so there is always room for improvement. And no company will be able to assert that their supply chain is deforestation free by next year. So no retailers scored the full 5 out of 5 with our methodology this year, but you can see that they are still doing significantly better than the average. So as we touched on before, palm oil has consistently had the most commitments across these commodities every year. They also tend to have the strongest commitments in the palm oil sector. So 19 companies scored the full 5 out of 5 this year for their palm oil commitments. Whilst there is a mix between manufacturers and processors and traders in the top 10, it is weighted towards manufacturers. So 8 of the top 10 are involved in manufacturing, and 4 of the top 5 are solely manufacturers. So these manufacturers are at the downstream end of the supply chain. So they are several steps removed from where we want the impact to be had and ending deforestation. So there needs to be more to bring up the upstream companies to have similar strong commitments. The cattle sector is very different. So cattle has the fewest commitments, and they also tend to be much weaker than palm oil commitments. So this year, only 20 companies, which is 16% of the companies we assessed for cattle, had a commitment to protect forests in their production or sourcing. And 14 of those 20 didn't apply to all of their sourcing regions. So they were much more likely to just protect the Amazon and not include other forest types or other regions. Similar picture for soy. So there are fewer commitments in soy than there are in palm oil or timber. And they also are often much more regionally focused. Interestingly, in soy this year, we did see some conversion-free commitments. So when we were doing the assessments, we had 2 conversion-free commitments from COFCO and Louis Dreyfus. Although that doesn't mean that they're scoring particularly well across the board. So Louis Dreyfus is in the top 10, but COFCO isn't. And that's because their commitments fell down either on implementation or the scope of those commitments. Just to note that Cargill has added a conversion-free commitment since our assessment period ended, so that is not captured in these results. So in timber and paper, we again see a domination of the top 10 with the manufacturer end of the supply chain. So in fact, 7 of the top 10 paper companies are buyers of paper to use as packaging rather than manufacturers of paper themselves. So Kimberly-Clark Group, which is number 5, is actually the top scorer for paper manufacturers in there. And companies in timber and paper were the least likely to score for any of the implementation indicators of any of the commodities. This is interesting because in previous years we've seen that timber and paper have the most commitments after palm oil. They also tended to have the strongest commitments after palm oil. But adding in our new indicators shows that there seems to be a bigger implementation gap in timber and paper than in the other commodities. So what can you do with this information? So please do download and read the report, which goes into more detail on the findings that I've touched on here and pulls out other trends in the data as well. We sent a pack to you this morning, which I encourage you to look at, which again pulls out some of the interesting trends, some case studies. It also has some suggested tweets, which if you can use in your communications, that would be fantastic. But most of all, we do really want to encourage you to download and use our data. So in the past, as Nikki has mentioned, the Forest 100 data has been used every year to help track progress towards the New York Declaration on Forests goals. It's also been used by organisations such as the Accountability Framework Initiative to help develop the guidelines. And it's also been used by financial institutions who are looking at the companies that they finance, and they're trying to work out where their strengths and weaknesses lie, what they should be engaging, what topics they should be engaging them on, and things like that. So we really see that organisations such as yourselves could use our data in your own work. So it could be used to help identify targets for engagement, for campaigns. With the full data set, you can really hone in on any issues that are important to you or your strategy and see which companies or financial institutions are doing well or poorly in that area. We also encourage you to use it and cross-reference against any data you may have on the power brokers to help your own analyses. So please do make use of it, download it, explore it, and let us know if you need any help with it, or if you do manage to use it, we'd love to hear how you do. So a quick example of what we've done with our data, we wanted to plot where companies are on the journey to a deforestation-free supply chain. So using our indicators, we classify companies as inactive if they've made no commitments to sustainable sourcing or if they were showing no awareness. If they had vague sustainability commitments or had shown some awareness of the value of forests in their communications, they're awareness. Commitments to protect forests gets them to commitment stage. Scoring for our implementation indicators gets them up to implementation. And then some companies have done all of that and are starting as well. But unfortunately, none have made it to a truly zero deforestation supply chain. Thank you very much for listening. Does anyone have any questions? I'll now open it up for questions. Feel free to unmute or to send a message. Okay, if no one has any questions, then we'll end it there. Please do. Oh, we do have a question, sorry. Oh, they're coming in now. So we have a question in the chat. Will you do any advocacy work in the run-up to 2020? We are looking to do more with our data in the run-up to 2020 and to be putting out there the findings that we've got and that the companies and the financial institutions are not doing enough and we are going to miss 2020. We also do encourage others to use our data in their advocacy work as well. Another question, are there any plans to expand into the rubber supply chain? No, we have focused on these supply chains in the past, and every year we talk about adding new commodities, but it's always been decided that these are the ones to focus on. As I'm sure you can understand, the assessments are quite time consuming, so it's always been decided that narrowing in on the key commodities was important, so we have no plans to add rubber at the moment. So considering the assessments are based on publicly available information, what has the reaction from businesses been like? We've had a few companies come back already today asking for more feedback on where they have fallen down. So there is an appetite for more information on exactly why they're scored against in certain indicators and not against others. I guess we've got quite a strong standpoint that it is only on publicly available information. So if they have private policies, we can't score them on that. But there is still occasional upset when companies aren't scoring as well as they expect to be scored. How do you map the relationship between companies and their investors? So we use data from Thomson Reuters and Bloomberg primarily, and we look for active loans and shareholdings, and then we rank the financial institutions that have the most finance across those different types in the 350 companies that we've selected. Any further questions? Okay, in that case, I will end it there. We will share a recording, and if there are any follow-up questions, feel free to email us. Thank you everyone for joining.